A limited liability company, or LLC, is a popular business structure that offers its owners, known as members, limited liability protection. This structure is favored by many small business owners due to its flexibility and the protection it offers. This means personal assets are shielded from business debts and lawsuits. In other words, if the business incurs debt or faces legal action, the personal assets of the members, such as their homes or cars, are generally protected. Think of it as a protective bubble around your personal belongings. This bubble ensures that your personal financial health remains intact, even if your business encounters financial difficulties. An S Corporation, or S Corp on the other hand, is a tax designation granted by the IRS. This designation can be applied to an LLC or a corporation, allowing it to benefit from certain tax advantages. It allows a business to pass its income, losses, deductions and credits through to its shareholders' personal income tax returns. This means that the business itself is not taxed at the corporate level. This avoids the double taxation often associated with traditional corporations known as C Corp. In a C Corp, the business profits are taxed at the corporate level and then again at the individual level when distributed as dividends. Imagine a small business owner, Sarah, running a bakery as an LLC. She enjoys the benefits of limited liability protection and the flexibility in management that an LLC offers. She takes home the profits, but her personal assets remain separate from the business. This separation is crucial for protecting her personal wealth. If the bakery faces a lawsuit, Sarah's personal savings and property are protected. This legal protection is one of the main reasons many small business owners choose the LLC structure. Now, let's say Sarah wants to optimize her tax structure. She might consider converting her LLC to an S Corp to take advantage of potential tax savings. Converting her LLC to an S Corp could potentially lower her overall tax burden by avoiding double taxation on her business profits. This strategic move can result in significant tax savings, allowing Sarah to reinvest more into her bakery or take home a larger portion of her earnings. The decision to convert an LLC to an S Corp is often driven by tax benefits. S Corp can offer significant tax savings for businesses with substantial profits. By passing income and losses through to shareholders, S Corp avoid the corporate tax rate, which can be higher than individual income tax rates. This can result in a lower overall tax liability for the business owner. For instance, if Sarah's bakery earns significant profits, converting to an S Corp could mean paying taxes only once on her share of the profits at her individual income tax rate. This can be particularly advantageous if her individual tax rate is lower than the corporate tax rate. However, it's important to note that converting to an S Corp also comes with additional paperwork and compliance requirements. Form 2553, election by a small business corporation, is the official IRS form used to request S Corp status for your LLC. This form is essential for any small business looking to take advantage of the tax benefits that come with being an S corporation. Think of it as an application form for a special tax designation. By filling out this form, you are essentially telling the IRS that you want your LLC to be taxed as an S corporation, which can offer significant tax savings and other advantages. This form collects essential information about your business, its shareholders, and their consent to the S Corp election. Each shareholder must agree to this change, and their signatures are required to validate the form. Filing Form 2553 correctly and on time is crucial for the IRS to recognize your LLC as an S Corp for tax purposes. Missing the deadline can result in your application being denied, which means you won't be able to take advantage of the S Corp benefits for that tax year. Imagine Form 2553 as a passport application for your LLC to enter the world of S Corp taxation. Just as a passport allows you to travel internationally, this form allows your business to navigate the tax landscape more efficiently. Just like a passport grants you entry into another country, Form 2553 allows your LLC to access the benefits and regulations associated with S Corp status. These benefits can include pass-through taxation, which can help you avoid double taxation on your business income. Without this crucial document, your LLC will continue to be treated as a disregarded entity or partnership for tax purposes. This means you could miss out on potential tax savings and other advantages that come with S Corp status, making it essential to understand and complete Form 2553 accurately. Filing Form 2553 might seem daunting, but it's a manageable process when broken down into steps. First, gather all necessary information, including your LC's name, employer identification number or EIN formation date, and the tax year you're electing S Corp status for. Next, provide details about your shareholders, such as their names, addresses, and social security numbers. Think of filling out Form 2553 like baking a cake. You need to gather all the ingredients or information before you can start mixing and baking, which is filling out and submitting. Accuracy is key in both cases. Make sure all information is correct and complete to avoid delays or rejections from the IRS. Section 5. Meeting deadlines, a critical aspect of conversion. Timeliness is crucial when filing Form 2553. The IRS has strict deadlines for S Corp elections, and missing these deadlines could result in your election being rejected. Generally, you must file Form 2553 within 2 months and 15 days after the beginning of the tax year for which you want the S Corp election to take effect. Imagine the deadline for filing Form 2553 as a train departure time. If you miss the train, you miss the opportunity to benefit from S Corp status for that tax year. It's crucial to plan ahead, gather all necessary information, and submit your Form 2553 well before the deadline to avoid any last-minute panic or potential rejection. Section 6. Reaping the benefits advantages of S Corp status. Converting to an S Corp can provide significant financial advantages for eligible businesses. The most notable benefit is the potential for tax savings. By avoiding double taxation, S Corp owners can often reduce their overall tax liability. Additionally, S Corp offer liability protection to their shareholders, safeguarding personal assets from business debts and lawsuits. Think of converting to an S Corp as a strategic financial move, like choosing a savings account with a higher interest rate. It can potentially put more money back in your pocket by reducing your tax burden. This can free up funds for reinvestment in the business, expansion, or simply increased personal income. Weighing the drawbacks, potential considerations. While S Corp status offers numerous advantages, it's essential to consider potential drawbacks before making a decision. S Corp face stricter operational requirements compared to LLCs, including holding regular shareholder meetings and maintaining detailed corporate records. Additionally, certain restrictions on ownership and share types may apply, potentially limiting flexibility for some businesses. Imagine the decision to convert to an S Corp as a balancing act. You need to weigh the potential benefits, such as tax savings, against the added responsibilities and restrictions. For some businesses, the benefits outweigh the drawbacks, while for others, remaining an LLC might be a better fit. Illustrative examples, making sense of complexities. Let's illustrate the benefits of S Corp status with a simplified example. Understanding these benefits can help business owners make more informed decisions about their financial strategies. Imagine two businesses, both generating $100,000 in profit. One is an LLC, the other an S Corp. This scenario will help us see the differences in tax treatment between these two business structures. The LLC, subject to double taxation, might pay a corporate tax rate, say 21%, on its profits, followed by the owner paying personal income tax on any dividends received. This means the same income is taxed twice, once at the corporate level and again at the personal level. The S Corp, on the other hand, passes its profits through to the owner's personal income, potentially avoiding the corporate tax altogether and only paying personal income tax on the $100,000. This can result in significant tax savings for the business owner. This simplified example demonstrates how S Corp status can lead to a lower overall tax burden. By reducing the amount of taxes paid, business owners can reinvest more money back into their business, fueling growth and expansion. However, it's important to consult with a tax professional to determine the specific tax implications for your unique business situation. Every business is different, and a tax professional can provide personalized advice to ensure you are making the best financial decisions for your company. Seeking expert guidance, where to find help. Navigating the complexities of business structures and tax regulations can be challenging. If you're considering converting your LLC to an S Corp, seeking guidance from qualified professionals is highly recommended. A certified public accountant or CPA can provide personalized advice based on your business's financial situation, while a business attorney can guide you through the legal aspects of the conversion process. Think of seeking professional advice as consulting with specialists for your business. Just as you would see a doctor for medical concerns, consulting with a CPA and a business attorney can provide you with the expert knowledge and guidance you need to make informed decisions. Conclusion: making informed decisions for your business. Converting your LLC to an S Corp can be a strategic move for businesses looking to optimize their tax structure and potentially reduce their tax liability. However, it's not a one-size-fits-all solution. Careful consideration of the benefits, drawbacks, and long-term implications is crucial. Seeking guidance from qualified professionals such as a CPA and a business attorney can provide valuable insights and help you make informed decisions that align with your business goals. Remember, understanding your business's unique needs and seeking expert advice are key to navigating the complexities of business structures and tax regulations. By carefully weighing your options and making informed decisions, you can set your business on a path towards success.